Hello, good morning, ladies and gentlemen. Compliments of the season to you all. I'm excited to be here this morning. So let's quickly confirm that we are all on the same page here. So if you can see my screen and you can hear my voice clearly, I will appreciate you typing hi in the comment section so that we can get the session started. All right, let's see what is happening right here in the comment section. Do we have some responses to confirm that we are good to go? Is my audio quality good? Is my visual good? And let's get this started. All right, I can see Drago Malik. Good morning to you. Thank you very much. 028, good morning. Thank you. Oh, 526, you're welcome here. I hope you're going to be staying with us through the session so you can understand how this thing works. Sabines, good morning. Hey, Carrie, good morning to you. Glad to have you around. Thank you very much for that confirmation. I can see Steamroller as well. Good morning, Steamroller. How are you doing? How is work today? All right. I would like to take this as a confirmation that we are good to go. So I welcome you to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's our culture here. As usual, we shall be reviewing all the pairs we have been monitoring since the beginning of the week. We are going to be looking at how well these pairs are doing and if there are any important decision we want to be making for today. We will be deliberating on these ideas as the session goes by. So my advice is that you stay tuned in so that you don't miss out on any of the ideas or opportunities that we shall be talking about during the course of the session. So, with that being said, let's dive into the charts and let's see what is going on in the market right now. Well, for the economic calendar, we really don't have any macroeconomic event that will be driving price action. When I mean macroeconomic event, I mean a high impact event that will be bringing liquidity into the market to drive price movement. So we shall be relying solely on our technical skills to identify any trading opportunities that we could actually take advantage of today. So I can see Steamroller saying that he has no work to do. Well, welcome to the holidays. All right. Okay, can we do GBP USD if you have time? Well. I think GBP USD was part of the pairs we deliberated on yesterday. I guess so. I think we did GBP USD. Oh, I think we didn't. There was no time for that. So I hope we could do that anyway. So let's quickly dive into the charts and let's kickstart the live session. All right. So on the US oil was the first commodity we treated yesterday. And where were we during the live session yesterday? So as at yesterday morning, we were around the $80 level here. And the first thing we observed during the early hours of yesterday was the fact that price action has been trading within a channel between the $80.50 level, which you can see here. So we had the resistant level of the channel around the $80.50 level, and then we had the support level of the channel at around the $79.50 level, giving us a clue that there is an indecision in that market at that particular point in time. And what we were actually looking out for is a signal in the form of either a panel to give us an opportunity to trade the US oil, that is a breakout of the resistant level at the $80.50 level, or a breakdown of the panel at the $79.50 level, give us an opportunity to join either a bullish or bearish momentum. And what we saw here during the New York session yesterday was quite interesting, as we saw a little breakout of the $80.50 level, which was an opportunity for us to buy. And I actually took advantage of that opportunity. But unfortunately, price took us out at break even as we moved our stop loss accordingly to lock in some profit. And well, we were taken out of that position. And what we saw during the later part of the New York session was that the $79.50 level continue to reject all selling pressure on the US oil. However, during the early hours of today, we saw a situation where price broke down the $79.50 level, which also shares a confluence with the bullish trend line. And in that regard, we want to be as a bearish signal. And what we did was to take advantage of that bearish opportunity. And I hope you actually didn't miss that. And if you didn't, you will currently be running in profit with at least about 50 pips thereabout in profit at this point in time. So at this point in time, we shall be looking at what we are going to be looking forward to during the New York session today as price action continue to trade below the $79.50 level. So what we are going to be doing right now is to first of all scale up to the daily time frame to have an holistic view of what is really going on here. Let's see how the structure on the higher time frame lines up with what we have on the 1 hour time frame before making an informed decision for today. And for those who had missed out on the breakdown of the $79.50 level, we shall be looking at if the market is going to be presenting us with another opportunity to join that potential decline if that is where price will be going for this week. So let's quickly run through the daily time frame here, and we shall be zooming right into the daily time frame. And what do we have here? So, like we said yesterday, the daily time frame projects that we have been witnessing a bearish momentum since the second beginning of the second half of this year. That was in the month of June here, and as a result of this, we had this bearish trend line figured out after connecting the series of lower highs here. So we had a black dotted line on our screen continue to guide bearish momentum. However, if we fast forward into what has been happening between the month of October and now, we will notice that price action has been within a consolidation phase around the $93.50 level and the support level here at the $78-80 area to emphasize the decision in this market. However, at the beginning of this month, we saw a breakdown of that demand zone to now a possible bearish momentum here as price action broke down that demand zone that has a memory for buying power for over 2 months here. So we saw the breakdown of that structure, and that was actually a signal that we might be having a trend continuation downside. And from a technical standpoint like this, whenever we have a breakdown of a structure, we should be expecting that price will come back, do a retest to incite another wave to the downside. But instead, that was not what happened here, as price was unable to break the previous low at the $7 level, hereby transposing something that looks like a reversal pattern in the form of double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, as we shall be using that neckline as a guide for trading activities. And we had a neckline around the $78 level. We saw the breakout of that structure during the later part of last week to further emphasize that buyers are likely coming in gradually in the market. And since the beginning of this week, we have been with multiple rejection of dollar level. So we are at a critical point in the market right now where we really need to understand what is going on here. Is price going to continue to upside as long as it trades above the neckline area, retest of that key level or the bullish trend line? Remember, we had the break of that key level here last month. So we might be seeing a situation where price comes back into the structure to incite another wave bearish move. So what we are going to be looking forward to today is to see what is really going on around the $80, $70 area side, if we are going to be going upside or we are going to break down of the $78 level right the second wave of the bearish momentum that started at the beginning of this month. So in that regard, we shall be scaling back down to the lower time frame, and we shall be taking into consideration the $80 level here as being a major key level, at least the past couple of weeks. Now we have been seeing selling pressure right below that $80 level. So now we shall be to the let's see what is going down into the 1 hour time frame. Now, on the 4 hours time frame here, we discussed how we had a channel since the month of October. So we saw the supply, which resulted something like a double top structure, and price action evolved in for highs here at the resistance level, at low level of the descending channel. Now, in the month of mid month of November, our price action broke down the 8, and remember had been a major determinant here. $83 level happened here, and some attempt by the buyers to dollar level. And since price broke down the $83 level, we have been witnessing selling pressure below that structure to further emphasize the strength of the sellers at this point in time. And since price has been trading below the $83 level, it's quite reasonable that we continue to look out for selling opportunities below that structure. Now, if we look at what happened last week here, we finally saw the breakout of that descending channel. The resistance level of the descending channel was broken out to the upside last week to emphasize the strength of the buyers at this point, as the level was no longer strong enough to hold sell momentum. So, and if we look at this critically well and look at what has been happening here since the second week of the month of November, we can see that we have been witnessing buy pressure. And as a result of this, we had this um, bullish trend line identified after connecting the series of um, higher lows here. And as a result of this, we continue to look out for buying opportunity. However, during the early hours of today, we finally saw the breakdown of the $79.50 level, which shares a confluence with that channel we identified on the 1 hour time frame. Remember yesterday where we said we are either going to be looking out for a breakdown or a breakout of that channel to give us a signal of where price action will be going. So this is the channel here that we identified yesterday between the $80.50 level and the $79.50 area. So now we are seeing a breakdown of the $79.50 level, which also shares a confluence with that bullish trend line that has been holding bullish momentum since the second week of this month. So with a breakdown of the $79.50 level, sharing a confluence with the bullish trend line here, we might be having no choice than to look out for selling opportunities on the US oil for today and later on into the week. So a breakdown of the $79.50 level is a good bearish signal, where a retest of structure is what we are going to be looking forward to, with selling pressure right below the structure in our lower time frame to join that decline to the downside. And talking about decline to the downside at this point, where will our take profit target be here if price action finally breaks down that finally sees selling pressure below that structure to incite another wave of bearish momentum? Well, at this particular point in time, I will be taking into consideration the fact that price broke out of the resistant level of that descending channel. Remember, it was broken on Wednesday last week. Let me zoom out so that what I'm talking about. So we have the resistant level of that descending channel here broken out on Wednesday last week. So we might be having a situation where price action might come back to do a retest at the breakout here. Oh, what's happening here? Okay. So we had the breakout of the resistant level of that descending channel. So we might likely see a situation where price will come back to a retest of the structure, like another wave of bullish momentum. And if you look at the retest of that structure here, also shares a confluence with the bullish trend line that you can see on my screen right now. Hold on a second. I think, all right, I had a little switch here. I hope you can still see my screen here. So we had, you can see it shares a confluence with this with the resistant level of that descending channel. So this is where we are going to as a take profit target if the sell momentum continues. So let's go back down to the 1 hour time frame where we begin into more clearly and make a decision for today. Now, this is the 1 hour time frame here, and like I showed you on the 4 hours time frame, we finally saw the breakdown of the $79.50 level, which also shares a confluence with that bullish trend line. And remember, we took advantage of this move this morning, and I said for those who had missed out on this opportunity here, well, at this point in time, let's remain patient. You know, whenever we have a breakdown of a structure like this, we expect that one point in time, price is likely going to come back, do a retest of that structure that was broken. Then we scale down to our lower time frame, look out for selling pressure below the structure. Then we could actually join that decline to the downside. So this is how we are going to be selling the US oil for today. So for those who had missed out on the breakdown of the $79.50 level this morning, well, let's remain patient and see if price will do some retest of the $79.50 or probably the bullish trend line that was broken here to give us another opportunity to add more position to our existing trade. So that is one scenario we are going to be looking forward to sell the US oil this morning. Now, what happens if this turns out to be a false breakdown? So what happens if this turns out to be a false breakdown? Well, we also need to take that into consideration so that we don't get surprised when price action does the opposite of what we are talking about here. So one thing we see here is this. Look at the demand zone here. Since the beginning of the week, we have been witnessing buy pressure right around the $79.50 level to give us a clue into the strength of the buyers at that particular point in time. Then we saw the breakdown of the structure here. Well, it's reasonable to think that this might be a false breakdown. So if it does become a false breakdown, what are we going to be looking out for to buy? So if we were taking out of the sell position right now and price climbs up the $79.50 level during a confluence with that bullish trend line, and we start seeing buy momentum right above the structure on our lower time frame, maybe your 5 minutes or 15 minutes time frame, buy pressure above the structure, then it will be an opportunity to buy the oil. Then if a breakout of the $80.50 level happens, then we look out for another opportunity to add more position at the site of high pressure right above the $80.50 level on our lower time frame. So these are the scenarios we shall be looking out for trade the US oil for today. I hope you are able to screenshot my screen or munch my screen that you can use it as a reference point when you are about to make your personal decision on this pair. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries right in the comment section of this video, and let's see how I can be of help in that regard. So what I'll be doing right now is to take the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next option. Okay, so we have Susie MB, good morning to you. Glad to have you. Crypto Go, good morning. Apple Pie, I like that name. Good morning to you. Stimula says my voice is breaking up again. Wow, wow, wow. Is it? Oh my goodness. All right, let me check this out and see what's happening here. Okay, later said it seems better now. Oh, I see. I hope it's still better. 120. Good morning. All right. Good morning, innocent babe. Glad to have you around. All right. Thank you for that confirmation. So I want to assume that we are good on this one. So in the absence of no questions, I assume that we are good to go. So let's move on to the next option. Okay. Thank you, Simrola. Thank you very much. All right, let's move on to the next option here. And the next option we are going to be looking at, as usual, is the US Tech. And in fact, the US Tech was our trade for the day as it went all the way down into the first TP target zone. And this is what we had here yesterday. Remember how we projected this trading opportunity on the US Tech. So at the beginning of yesterday's trading session, we were able to identify a simple setup where we had a channel between the $11,090 level and the $11,015 area here. So we saw our price was caught within that consolidation phase there during the early hours of this week, giving us a clue of an indecision in that market at that particular point in time. And if you have been with us during this community, you know whenever we cite such a simple structure like a flat channel like this, we want to remain patient to look out for either a breakout of that structure to give us a signal that buyers are coming in this market, or probably a breakdown of that structure to give us an opportunity to sell the US tech. Now, in this situation, the later is what happened here, as we saw the breakdown of the $11,015 level, which was serving as the support level for this week. Remember, we had where price started the week around the 11,015. It was our support level, and we said if we cite a breakdown of that structure, we want to be joining the decline to the downside. And in fact, our sell stop order was triggered at that particular point in time. And if you are lucky enough, you could also have added another position at the breakdown of the $11,000 level. And if you had done that, actually well done, and kudos to you for being on standby to catch those moves. So at this point in time, price action rolled all the way down into the $10,800 level, which has been a strong demand niche in the last 1 week. So currently, if you are taking all that opportunity, you will currently be in at least 200 pips in profit with only one position running, if that is your situation. But if you had multiple entries, then definitely you will be uh, having more profits than what I just said earlier. So at this point in time, it is appropriate that we move our stop loss accordingly to lock in some profit, as we don't want to get caught up in any situation where price takes us out of our position in a loss. So we want to lock in whatever we have made so far. So at this point in time, I will be suggesting somewhere below the $10,900 level to be an area to lock in some profit here. Let's see how price action is going to play out going into the New York session. As we can see, we have been witnessing buy pressure here since the New York session yesterday. So we don't know if the buy pressure is going to hold, or we are going to be seeing a breakdown of that structure to incite another wave of bearish momentum. So what I'll be doing right now is to scale back up into the daily time frame. Let's quickly look at an holistic view of what is really going on in this market. Let's see the structure we have on the daily time frame. Probably still going to be supporting the continuation of a bearish move, or we are going to be seeing a reversal pattern during the New York session today. So in this regard, I will be scaling right up into the daily time frame. So let's quickly have an holistic view. And for those who are not part of the session yesterday, it will be a good opportunity for you to be on the same page with us. So right on the daily time frame here, the first thing we observed on the daily time frame is the fact that price action has been on a long-term bearish momentum, a momentum which has been holding since the beginning of this year. Now, if we look at the structure here, we are able to connect the series of lower highs. So we had this bearish trend line, and price action has consistently and uniformly respected this bearish trend line so far. Now, things got a little bit interesting in the month of June, where we saw a situation whereby pressure came in around the $11,000 level, negating all selling attempts to push price further to the downside. So we saw the first attempt of buying momentum around the in the month of June here, and then if we fast forward into the later part of the month of September stroke the early days of the month of October, we also saw another buy pressure coming in from that area. However, this got a little twisty here, as we saw that the buy pressure there wasn't that strong enough. As soon as price got into the $11,700 level, we continue to see selling pressure right below that structure, to emphasize that the sellers are still very, very strong in this market. However, when we zoom into the first week of the month of November here, let me zoom in so that you can see things more clearly here. So when we zoom into the first week of the month of November, we started seeing another buy pressure right above the 10,500, evolving into a huge engulfing candle that finally broke out of that $11,700 level, a level which has been holding selling pressure for over a month. And with the breakout of that structure, it's a sign that the buyers are actually very strong. But one interesting thing about the structure was the fact that as soon as price broke out of the 11,700, we saw a huge consolidation phase here that lasts a whole month. And we had a consolidation phase between the 12,050 and the $11,500 level to emphasize the indecision in this market. So participants were not sure if this bullish momentum, the breakout of the 11,700 will send price skyrocketing, or we could be having this breakout as a false breakout. Now, during the second week of the month of November, we saw a sharp rejection of the 12,050, which also shares a confluence with the bearish trend line we identified earlier to further emphasize that the sellers are very, very strong in this market. And this led to the final breakdown of the $11,500 level, a level which has been a strong buying niche for participants in this market in the past. So with the breakdown of that structure, it was a good signal that sellers are still very strong in this market. And we actually rode that move all the way down into the $11,000 level. So we saw price broke down into the $11,000 level. And yesterday, we saw the situation which we also took advantage of as price broke down the $11,000 area. So at this point in time, you would agree with me that the sellers are very, very strong in this market. And as at yesterday's trading session, we were thinking that since we had the breakdown of the 11,500, that there is a likelihood that price might come back to do a retest of that structure to incite another wave of bearish momentum. But it appears this is not the case here, as the breakdown of the $11,000 level is a very good sign that we might be having a situation where price might likely go as far as breaking down the $10,500 level here, a level which has a memory for buying power. Remember, we have a demand zone here in the month of October, stroke the early week of the month of November. We saw buy pressure around this area, and it appears that price is heading towards that area at this point. So I would like to extend this demand zone further into the future, into the present moment, and let's see how price is going to be reacting to the demand zone. So with the selling momentum we had here yesterday, sell position we had here yesterday, for those who are still in this trade, we want to be moving our stop loss. I will be advising you on where is appropriate to do that when we scale back to the 1 hour time frame. So at this point in time, our take profit target for the sell position should likely fall within the demand zone here. That is between the 10,700 and the $10,450 level. So this area will be most appropriate to have our take profit target for the current sell position that is running right now. And let's see if price will continue to the downside in such a way that it breaks down that demand zone with selling pressure right below the structure to further emphasize the strength of the sellers. Then we could actually add more position to our existing trade. However, if we start seeing buy pressure right within the demand zone here, probably will be another sign that buyers will come in again to put price to the upside. Remember, that level has been a strong buying niche in the past, so we might likely be seeing buy pressure coming from that area. So this is a very critical area. We want to see how participants in this market will be relating to that structure to determine if we are going to be adding more position to our existing sell position, or we are going to be getting ready to join another wave of bullish momentum. So at this point in time, we would like to scale down to the 1 hour time frame. So right now we have been witnessing buy pressure right around the 10,800. So we are going to be looking at how participants in this market will be relating to the 10,800 on our lower time frame to decide what our next line of action will be. So in this regard, we shall be scaling right back down into the 1 hour time frame where we already have a sell position running, and let's see how price action is going to be relating to the structure. So as a result of this, to make things a little bit easy for us during the New York session today, I was able to identify the support level at the 10,800. And if you see how this level has been a major buying niche, since Thursday last week, we have been witnessing buy pressure from that same level. One happened here. Then we also saw another one happen around here on Friday last week. And since the beginning of this week as well, we have been witnessing buy pressure from that area. So because of the buy pressure we are having here, we want to be moving the stop loss of our current sell position somewhere. Where did I say we should move it to then? I think somewhere below the 10,900, at least in the meantime. Let's see how price action is going to be relating to the 10,800, that demand zone we have here. So if we have a breakdown of the structure, we scale down to our lower time frame. Look out for selling pressure below the $10,800 level to add more position to our existing trade. But if that is not the case here, and instead we start seeing buy pressure, well, we want to remain patient here and wait out for a breakout of the 10,850, which I was able to identify here with the purple line. So we look out for price breaking out of that structure with further buying pressure right above this level to incite another wave of bullish momentum. So at this point in time, if a breakout of the $10,850 level happens here, I would advise that we have our TP target at the resistance point we had there at the beginning of the week. And if we have our TP target there, we should be looking at a possible 200 and over 200 pips in profit if price action moves in that way. But there is a caveat here that I would like to share with you. If the buy momentum happens and price breaks out of the 10,850 and continue to the upside, I want you to realize that this is a counter trade opportunity. And if you are not comfortable taking counter trade opportunities, well, I would advise you to stay out of this trade and let's wait out for price to finish the bullish momentum or the retracement before joining another wave of bearish momentum. But if you feel very comfortable with a counter trend opportunity, well, we take advantage of this move. TP target around the 11,090. That was our resistance point at the beginning of this week. And one thing I would like to state here is that as soon as price gets into the $11,000 level, remember how important that level is on our daily time frame. I think I showed you that a couple of minutes earlier. So if price gets into the $11,000 level, we want to be patient enough to see how price action will relate to that structure. So as a result of this, we will be moving our stop loss, lock in some profit, and wait out to see how price will relate to that structure. Are we going to be seeing selling pressure below that level? And if that happens, we want to be joining another wave of bearish momentum. But if a breakout of that structure happens, followed by buying pressure on our lower time frame, we could be adding more position to the buy trade and then wait out for selling pressure right below the 11,090 to join another wave of bearish momentum on the US tech. So these are my views here on the US tech. I hope you were able to munch my screen so that you can use it as a reference point if you intend trading the US tech for today. So we have two structures here that we shall be using to guide our trading activity. Like I said earlier, we have the 10,800. So a breakdown retest of the 10,800 on our lower time frame will be giving us an opportunity to sell the US tech. And if a breakout of the 10,850 to the upside with buy pressure on our lower time frame around that structure, we want to be joining that counter trend opportunity if you feel very comfortable with counter trend trade. That is my scenario here on the US tech. If you have any questions whatsoever, feel free to drop your comments or your inquiries in the comment section as usual. So that is that on the US tech. I will be checking the comment section from time to time. I want to make sure I run through all the pairs we have been monitoring since the beginning of the week, and if possible, treat the GBP USD as suggested by Steamroller. So the next here we are going to be looking at is the USDJPY, and on the USDJPY we are actually profitable since the beginning of the week here. As remember, we took advantage of the breakout retest of the $133.150 level, which has been pushing price to the upside. And if you are in that trade, you will currently be running with over 65 pips in profit at this particular point in time. Then we also had an opportunity yesterday when price broke out of the 133.600. Remember, during the live session yesterday, I told you that we should be having a structure around here where we shall be using to guide our trading activity. If a breakout of that level happen, it will also be a good opportunity to join. And if you are taking advantage of that as well, you will currently be running with about 25 pips in profits at this point. So with the sights of selling pressure right around the 134.200 Japanese yen level here, I will be advising us to move our stop loss. Let's lock in some profit here. And at this point, I will be suggesting that somewhere around the 133.620 Japanese yen level seems most appropriate that we lock some profit, and let's see how price action will play from this level. And for those who had missed out on the opportunities that we have here since yesterday, well, let's see if the market is going to be presenting us with another opportunity to add more position to our existing trade. And if the case that price might likely go the other way, we want to be getting ready to join that decline if that is going to happen. Now, let's quickly scale back to the daily time frame. Let's have an holistic view of what is really going on in the market before we come back into the 1 hour time frame to make a decision for today. So right now we are back on the daily time frame here, and it is very obvious that we have been on a bullish momentum since the beginning of the year. And as a result of this, we had a trend line, a bullish trend line there, which you can see with the black line on your screen. Price has consistently respected that trend line until last month when we saw the breakdown of that trend line to push price further to the downside. Now, there is a catch here. In the month of August, things got a little bit interesting, giving us a simple setup that we could actually use to trade the USDJPY, and that was the reversal pattern that we cited, right, sitting right on the bullish trend line here in the form of a double bottom structure. And with a double bottom structure like that, we know we always want to look out for uh, um, a a neckline that we want to be using as a yardstick for trading activity. So we had a double bottom structure here, and the 135 Japanese yen level served as the neckline of that reversal pattern. Then we saw the breakout of that structure, which pushed price to the upside, and in fact it went to as far as the 152 Japanese yen level. And it actually took about 3 to 4 months for price action to come back and do a retest of that neckline here during the first day of this month. And since the first day of this month, price was caught within a consolidation phase between the 138 and the 135 Japanese yen level to emphasize the indecision at that particular point in time. And as a result of that, well, this last week we were looking forward to either a breakout of the 138 to incite the trend continuation to the upside, or a breakdown. So a breakdown is what happened. Though we missed this move, but we were able to catch the second wave of that bearish move as price action dropped to as far as the 131 Japanese yen level. And what we saw here made things a little bit interesting and simple for us to trade. And that is the fact that price was back at a zone that has a memory for buying power. So if we look to as far as the month of August, we saw out that level at the 131 Japanese yen level, held by pressure, which pushed price to the peakest point for this year at the 132 Japanese yen level. So we had a buy zone there, and even if we go to as far as the month of June, we can see that we also had another buy pressure right around that area. So at that point, we were able to identify this level as a demand zone, at least in the meantime. As long as price action trades above that level, it's going to be serving as a good demand zone for us. Unless price breaks down the structure to the downside, the demand zone will continue to hold for us for buying pressure. So since yesterday, we have been enjoying this bullish momentum to the upside as price edge closer to that 135 Japanese yen level. So what we are going to be doing here, like I said on the 1 hour time frame, we are going to be moving our stop loss to lock in some profit, like I said on the 1 hour time frame, and we shall wait out to see how price action is going to be relating to the 135 Japanese yen level. So if selling pressure coming around that area, so we had this breakdown of the 135, and from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that price might likely come back, do a retest of that structure to incite another wave of bearish momentum. And so as a result of this, we want to see how price action is going to relate to that structure. Are we going to be seeing selling pressure right below that structure to incite another wave of bearish momentum? Or are we going to be seeing a breakout of that structure followed by buying pressure right above the 135 to give us another opportunity to add more position to our existing trade? And like I said yesterday, from a long-term perspective, our TP target for buying opportunity will remain around the 145 level, a level which shares a confluence with the bullish trend line that was broken here last month. So we had a breakdown of that bullish trend line. Likely price might come back to do a retest of that structure. So this is what we have here on the daily time frame. So let's scale back down to the lower time frame Let's see how price action is relating to the 134 Japanese yen level here. And let's see if price will continue to go to the upside, or we are going to be seeing selling pressure here to push price to the downside. So as a result of this, we shall be scaling back down to the 1 hour time frame. And here we are on the 1 hour time frame. So this is the structure we have been working with since the beginning of the week. Okay, let me show you something on the 4 hours time frame. Okay, let's look at the 4 hours time frame first before we scale back down. So on the 4 hours time frame here, it is obvious that we have a bearish trend line figured out. Price action has consistently respected that bearish trend line since the later part of the month of October here. So we have been witnessing that consistent rejection respect of that trend line. Price continue to push price to the downside, and we continue to find lower lows and lower highs. However, if we zoom into the month of November here, we also have an important structure around the 138 Japanese yen level, which has been a strong buying niche at one point in time before price action broke down that structure here on the first day of this month. And since price broke down that structure, we have consistently witnessed a rejection of that level to further emphasize the strength of the sellers at this point. And from this kind of structure here, it is reasonable that if we want to trade this, we continue to look out for selling opportunities. However, when we zoom into what has been happening here in the last 1 week, that is, we want to look at what has been happening here since last week. You can see we had this impulsive move to the downside last week. We saw this impulse leg, and as soon as price tested at 131 level, we identified on the daily time frame, we saw a consolidation phase where price transitioned into a rising wedge. And whenever we see a rising wedge like this, it's more or less a trend continuation pattern where a breakdown of the support level of that wedge could incite another wave of bearish momentum. And like I said yesterday, that it's not all the time that price action does that. Sometimes there will be some possible shakeouts where price will break out of that structure to the upside before we now start seeing a bearish move to the downside. So as a result of this, and to make things easy for us this week, the first thing I did here was to identify a key level that we shall be using to guide our trading activities for this week. And that key level came in the form of the 133.00 level, a level which has been holding selling pressure since Tuesday last week. And on Friday last week too as well, we saw that that level was rejecting all buyers' attempts to break out of that structure. And in fact, during the beginning of this week, we saw this channel 133.150 and the 132.650, where price was caught within that consolidation phase, just exactly around the 133.00 level. And one thing I said yesterday is that we shall be looking for either a breakout of that channel at the 133.150 to buy, or a breakdown of the 132.650 to sell the USDJPY. And the former is what happened as we took advantage of the breakout retest of the structure to the downside. So now at the situation we have here, remember we now identified our TP target for that buy position. As we said that the rejection of the 131, which transitioned into a consolidation phase, could be seen as a retracement of that impulsive move that started last week. That is this impulse leg. We might be seeing a retracement in somewhere around here before another wave of bearish momentum. So as a result of that, to make things easy, we were able to identify an area between the 134 and the 136 Japanese yen level as an area for our TP target. And that was because of the Fibonacci retracement tool we used. When we run it through the previous impulse leg, we aimed between the 50 and the 78.6% as an area where we look out for TP target. Now, if you look at what happened here in the last 12 hours, we saw that price is back into the 50% retracement of that previous impulse leg. And since price tested that 50% retracement, we have been witnessing selling pressure from that level. And is this going to be the point where sellers will come in? Remember, this is the sell window and also the TP target for our buy position. So are we going to be seeing selling pressure here from this point to send price crashing to the downside, or the selling pressure will start from the trend line or the 135.600 before the bearish momentum starts. So at this point, I have told you that we should move our stop loss. Let's lock in some profits and let's wait out and see how this current candle will close. And if we go down to the 1 hour time frame to see things more clearly, we have this bullish trend line, which is the support level of that wedge we identified on the 4 hours time frame. So I made it a little bit thicker, and let's use this to guide our trading activities for today. So I will extend this bullish trend line a little further into the future, and let's see how price is going to be relating to that trend line for today. So for those who had missed out on all of these opportunities we had here, one thing we are going to be doing right now is to remain patient here and wait out for price action to evolve into a pattern that can give us trading opportunities. So what we are going to be looking at first of all is, let's see how far this bearish move that has started an hour ago is going to go. If it's going to go to as far as the 133.600. Remember, the structure was broken yesterday here, and from a technical standpoint, whenever we have that breakout of structure like this, we should be expecting that one point in time price is likely going to come back, do a retest of that structure, if possible side buy pressure on the lower time frame to add more position or join that move to the upside. And one interesting thing about that trend line is the fact that it shares a confluence with this 133.600 level, which was broken, and also we have that bullish trend line there sitting right around that area. So we are going to be waiting now to see how price action is going to relate to that structure if the sell momentum we have here continue to the downside from the structure. So we are going to be waiting now to see if this move continues to the downside, continues into the 133.600, and if we side buy pressure above that structure, we want to be buying the USDJPY. However, if a breakdown of the 133.600 level happens, if a breakdown of the 133.600 happens, remember it shares a confluence with the this bullish trend line here, then that is a bearish signal. Then we scale down to our lower time frame, look out for selling pressure below the structure. Then we want to be joining that decline to the downside from that point. So this is what we are going to be looking out for during the New York session today. Now, if price does not break down to 133.850 and instead we continue to see price continue to the upside, then we want to remain in our buy position, and then we want to be looking forward to opportunities to add more position to our existing trade. So as a result of this, I will be connecting the series of lower highs here, and let's see how price action is going to be relating to the structure. So we are going to be looking out for a breakout of that trend line if price does not drop to as far as the 133.600, and if the buy pressure above the 133.850 here continues, then we look out for the breakout of that trend line here, then buy pressure right above the structure on our lower time frame. Then we could add more position to our existing trade with the TP target sitting anywhere within the TP target zone we've identified here. So this is what we are going to be looking forward to on the USDJPY. I hope you screenshot my screen so that you can use it as a reference point when you are about making your personal decision on the USDJPY. So if you have any questions, feel free to drop your inquiries right in the comment section, and let's see how I can be of help in that regard. So with that being said, I will be moving on to the next pair, which is the gold. And for the gold, we were very profitable on the gold since yesterday as we took advantage of this buy opportunity. I hope you are able to take advantage of this move. Remember, during the live session yesterday, we were around, where were we at during the live session? Okay, we were around the $1,806.50 level here, when I told you that I already took advantage of the buy position at the breakout of the $1,806.50 level. And this was as a result of identifying a channel. So this is where price started this week, 1,799. Somewhere around the 1,800, we saw bullish momentum, which I actually missed. And I said, we shall going to be looking out for a breakout retest of the $1,806.50 level to join the rally to the upside. And this is exactly what happened here. We saw the breakout. Even price came out to give you opportunities to join. And if you had joined this move, kudos to you, as price action moved over, how many pips was that? Moved over 2,700 pips before we started seeing this bearish momentum to the downside. And if you had actually taken advantage of that move, kudos to you for being on standby to catch that move, as you will currently be in profit on the XAUUSD before were taken out of that buy position. So during the early hours of today, I shared this on my public platform where we started seeing selling pressure continue here, and as a result of that, I drew this bearish trend line. And for today, this bearish trend line will continue to guide our trading activity. So what we are going to be looking forward to here is that if price continue to trade below this trend line, we continue to remain comfortable in our sell position. So during the early hours of today, I took advantage of this opportunity here. Like I said, I shared this on my platform, and I said if price trades below the 1,813, we continue to look out for selling opportunities. And in fact, we have multiple entries here. We had this first position running here. Then we also had a second position at the breakdown of the $1,809.50 level. And we also had the third position at the $1,806.50 area. So if you had been part of this trade, the sell position since the beginning of today, well done to you for being on standby to catch this move as it happened. So now the next thing we want to be doing is we don't want to give back to the market whatever we had made so far. So what we are going to be doing next is to lock in some profit at this point in time. So for me on this one, I will be suggesting that the 1,806, right above the $1,806.50 level, seems most appropriate to lock in some profit on the XAU USD. And now for those who had missed out on this opportunity, well, I'm of the opinion that price action might give us another opportunity to join that decline. And what I'll be looking forward to here is to see price break down the 1,800. Remember how important the $1,800 level is on our daily time frame to join that decline to the downside. And for those who don't know how important it is, well, I will be showing you that in the moment when we scale up to the daily time frame. Now, when you look at the structure here around the $1,800 level, you can see how it also shares a confluence with that bullish trend line that has been holding by pressure since last month. Remember this bullish trend line we identified yesterday? Let me extend it out a little bit so that we can see it more clearly. So we have this bullish trend line, and it appears we begin to see buy pressure come in around this area. So we are going to be very patient here on the XAUUSD. So like I said, to add more position to our sell position here, we want to see a breakdown of both the 1,800 and that bullish trend line to give us a bearish signal. And if possible, we start seeing selling pressure below the structure to further emphasize the strength of the sellers at this point. And if a breakdown of the 1,785 happens, then it want to be looking forward to adding more position to our existing trade. However, if the buy pressure here continues in such a way that it breaks out of the bearish trend line I said shall be serving as our yardstick for trading activities. Remember, I identified this bearish trend line here. I said it's going to be our yardstick for trading activity for today. So if the buy pressure here continues in such a way that it takes us out of our sell positions and then breaks out of this trend line here, right above the $1,806.50 level, followed by buying pressure right above the structure, then we want to be joining the second wave of that bullish momentum that started yesterday. And if you look at the structure closely, I told you how the 1,800 level was a support level for this week. So this is where price started this week here. So we had this area. This is where price started this week, and price appears to have come back to where the week started here. So what we are going to be looking out for right now is to see how price will react to the 1,800. So at this point in time, it's important that we remain patient here. Wait out for price to finish his reaction with the 1,800. And for us to sell right now, add more position to our sell position, we want to be seeing a breakdown of the 1,800 retest of the structure. Then we want to be joining that decline to the downside. But if the buy pressure here continues to the upside, well, we shall remain patient as well and wait out for this move to break out of the $1,806.50 level, a level which also shares a confluence with the bearish trend line here. Look out for buy pressure above the structure on our lower time frame. Then we could be joining that bullish momentum to the upside. Now, for those who are not part of the live session yesterday, I want to let you know how important the $1,800 level is. And to do that, I will be scaling up to the daily time frame here. So let's quickly look at what is happening on the daily time frame. And you can see how important the 1,800 is. So if you look at the structure we have here on the screen right now, you can see that's the $1,800 level here with the orange gold line. Let me call it the gold line. So that's the 1,800. And you can see how important that level has been since the beginning of this year. Look at the first couple of months this year, this level was holding by pressure, at least between the month of December and February of this year. It was an accumulation zone for buy pressure. The same thing happened here in the month of May. We saw buy pressure around this area, but it appears it wasn't strong enough as it met strong resistance from the sellers, which finally led to the breakdown of the $1,800 level. You can see the level was broken on the month of July, and since the breakdown of the 1,800, price has continued to trade below that structure to further emphasize the strength of the sellers at this point. So right now we have a huge consolidation phase around the 1,800 since the beginning of this month, hereby giving us a clue that there is an indecision in this market as the tussle for the 1,800 between the buyers and sellers continue. So for us to sell the XAUUSD right now, I will be looking forward to price breaking down the 1,800, probably the 1,7852 as well. Then we look out for selling pressure on our lower time frame to join that decline to the downside. But if price continue to trade below the 1,800, we want to be looking out for buying opportunities right above that structure. So the 1,800 is a very important structure for us for this week. We are going to be all eyes shall miss anything that happens around there. So if buy pressure happens above the 1,800, buy pressure, and if the breakdown of the 1,800 happens, we continue to look out for sell pressure. So let's go back to the 1 hour time frame. I just wanted to show you how important that 1,800 is on the daily time frame. So we're right back on the 1 hour time frame, and this is the, hold on a second, let me show you again. Okay, so this is the $1,800 level here. And as you can see here in the last hour, we have been witnessing buy pressure right above that structure at this point. So I told you, like I said on the daily time frame, if a breakdown of the 1,800 level happens here with selling pressure below the structure, we want to be having a sell position running on this one. And if the buy pressure here continues in such a way that it continues to the upside, and it takes us out of our current sell position here, leading to the breakout of the 1,806 level, a level which also shares a confluence with the bearish trend line. Then we want to be getting ready to buy the XAUUSD with the hopes that we see buy pressure above the structure in our lower time frame. Then we join the rally to the upside. And if that happens, and the breakout of the $1,820 level happens here with buy pressure above the structure, we want to be adding more position to our XAUUSD. So these are my views here on the XAUUSD. I hope I was able to simulate all the possible scenarios that could likely happen. So when it finally happens during the New York session, we will not be caught surprised at that move when it happens. So we want to be on standby to catch all this possible position that might likely happen at this juncture in the market. So at this point, I'm so sorry, Steamroller, I wouldn't be able to treat the GBP USD as suggested. Well, it was part of my watch list for the week, but time will not permit me to treat it. So I'm sorry about that. In this regard, let's quickly run through what we talk about today. Let's do a recap of what we talk about today, especially for those who missed out um, on the start of the session. So the first commodity we talked about today is the US oil, and we already having a sell position running as price action breaks down the $79.50 level, a level which also shares a confluence with that bullish trend line that was broken earlier on today. So we continue to look out for selling pressure right below the 1000 below the $79.50 level. Now, I stated something here that if at any point in time this breakdown turns out to be a false breakdown and price climbs up again, taking us out of the sell position, I want to be seeing a situation where price climbs above this bullish trend line, probably above the $80 level. Then I see buy pressure above the structure. Then we want to be um joining that rally to the upside. And if a further breakout of the $80.50 level, we want to be adding more position to this trade. But if that does not happen and price continue to trade below the $79.50 level, we want to feel comfortable in our sell position. And for those who had missed out on this opportunity, we took advantage this morning. I have told you to remain patient here, and let's see if the market is going to give us a second chance in the form of a retest of the structure followed by selling pressure on our lower time frame. Then we could actually join that decline to the downside. So this is what we are going to be looking forward to here. So we remain our sell position as long as price remains below the $79.50 level. So we moved on to talk about the US tech option, and on the US tech we had a positive situation here on the US tech yesterday as we were able to make over 200 pips in profit as price action came to test the $10,800 level, a level which has a memory for buying power in the last 1 week. So I said we should move our stop loss accordingly. Let's lock in some profit here and let's see how price action is going to react to the 10,800 and the 10,850 to decide what our next line of action it will be. So what I said here is that if price breaks down the 10,800 and we start seeing selling pressure below that structure, then we want to be adding more position to our sell position here. However, if the buy pressure here, that's you can see we had buy pressure here since last week. We saw here on Friday too, we had buy pressure from the 10,800. And since the beginning of this week, we have been witnessing buy pressure around the 10,800 as well. So if the buy pressure here continues in such a way that it takes out all the sell position below the 10,850, breaking out that level, then we start seeing buy pressure on our lower time frame above the structure. We want to be joining that bullish momentum to the upside. And I told you that we should be having our TP target somewhere around the 11,090 because that level was the resistant level at the beginning of this week. So we want to see how price action, how far is going to go. Will it get to that level? Then there is a catch here. I stated here that if we are joining that bullish momentum at the breakout retest of the 10,850, that as soon as price gets into the $11,000 level here, we want to be moving our stop loss accordingly, lock in some profit as we want to remain patient and see how price is going to be relating to that 11,000 level. If we see selling pressure below the structure in our lower time frame, we want to be getting ready to join that decline to the downside. And if instead a breakout of the 11,000 happens, followed by buying pressure right above the structure, we want to be adding more position to our exit trade. So let's be on standby to catch all these moves when they finally happen. That is the scenario we have here on the US tech. Then we went on to talk about the USDJPY, where we have been profitable since the beginning of this week. We took advantage. We have two positions running here. We had one above the 133.150, and we also added another position at the 133.600 level. And currently, we are in profit. And the first thing I told you here is that we want to be moving our stop loss to somewhere around the 133.600. Let's lock in some profit here and wait out to see how price action is going to react to the 133.850. So since the early hours of today, we have been seeing buy pressure right around the 133.850. So buy pressure could actually emphasize its strength here to push price to the upside. But if a breakdown of that level happens, we continue to remain patient as we can see price broke out of the 133.600 level here yesterday. So price might likely come back to do a retest of that structure here. And if you look at this closely, it also shares a confluence with the bullish trend line that has been holding buy pressure since last week. So we want to see if buy pressure will come in from that level. And if it does, we want to be getting ready to buy and then add more position to our buy trade as price action will move to the upside. But if that does not happen and instead we have a breakdown of the 133.600 like this, followed by selling pressure below the structure, we will have no other choice than to join that bearish momentum to the downside. And one thing I also shared with you here is the fact that we have a trend continuation pattern in the form of a rising wedge here on the 4 hours time frame. Remember, following this impulsive move here, we had this rising wedge pattern, which has a tendency of breaking down the support level to fight another wave of bearish momentum. But the way it is right now, we have a breakout, which we take advantage of. And what we are saying that we want to see how far this is going to go. So we had the sell window here. We had a TP target for the buy zone between the 134 and the 136 level. So where we said we shall be looking out for selling opportunity to the downside. But one thing we noticed during the early hours of today is the fact that as soon as price got retracement here, we have been seeing selling pressure from that level. So for in this instance, I will not be jumping into selling because I saw a sell pressure around the 50%. So we shall be using this trend line here as a yardstick for selling opportunity. So if price breaks down this trend line, a line which shares a confluence with the 133.600, selling pressure below the structure in our lower time frame, then we could actually join that decline to the downside. So these are my views here on the USDJPY. Then there's another thing I made mention of here on the 1 hour time frame is that if price does not drop to as far as the 133.600, but instead the buy pressure here continues to push price to the upside, then I want to be seeing a breakout of this trend line, retest of structure to give me an opportunity to add more position to my buy trade. So if breakout, retest, buy pressure on lower time frame, then we could actually join another wave of bullish momentum. Then we went on to close the day with the XAUUSD here. And on the XAUUSD, we already have a profitable position running yesterday. Remember, we took advantage of this move, which gave us about 1,700 pips before we started seeing that bearish momentum yesterday. And we also had an opportunity to join this bearish momentum this morning. I told you how we took advantage of that after citing selling pressure below that structure. And for those who had missed out on the sell opportunity had here, I told you that at this point in time, it's important that we remain patient here as we are at a very critical point in this market. So what we are going to be looking forward to is to see, remain patient and see price break down the $1,800 level here with selling pressure below the structure to give us an opportunity to join or add more position to our existing trade. And at the same time too, we could also look out for price retesting the 1,806, a level which also shares a confluence with this bearish trend line that we have here. So if price gets into the 1,806 level 50-cent area and we start seeing selling pressure on our lower time frame below that structure, it could be an opportunity for us to sell. And if a further breakdown of the 1,008 happens, then we look out to add more position to our existing trade. So now there is a catch here. Remember, this is the support level of this week. This is where price started this week at around the 1,799, 1,800, and it appears price is back within that level, and we are beginning to witness buy pressure coming from that area. So if this buy pressure turns out to be huge, that is strong enough to push price to the upside, well, and if price continues in such a way that it takes us out of the sell positions here, breaking out of this trend line that has been holding selling pressure since the beginning of today, then we want to be seeing this as a bullish signal. And if we are lucky, we start seeing buy pressure right above the 1,806 level on our lower time frame. We want to be joining or adding more position to our existing trade. So these are my views here on the XAUUSD. I hope and wish you be on standby to catch this when they finally happen. So on this note, I will be dropping the curtain on the Extreme Speed live session. I hope you had a wonderful time. For me, it was a great moment with you guys. I really appreciate every single one of you here. And my advice is that we should remain very, very patient whenever we sight a signal in the form of a breakout or a breakdown of structure. We want to remain patient to wait out for a retest of structure to give us further confirmation that price is actually going in that direction. And when I mean by retest of structure is this: whenever you have a breakout of a structure, a breakdown of a structure, we want to be scaling down to a lower time frame. It could be your 5 minutes, 10 minutes, 15 minutes time frame. Look out for retest of structure there, supporting the direction of the breakout. Then at that point in time, you want to be joining the decline or rally, whichever case it may be. So on this note, I wish you best of luck today, and I hope that we I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to review all the pairs we have been monitoring so far, and let's get ready for the New York session today. You have a wonderful evening. Bye bye.